Hey everyone, imagine waking up to this. The IMF just dropped a major warning 4 days ago. The global economy is slowing down much faster than anyone expected. In today's video, we're breaking down the IMF's April 2026 World Economic Outlook report and what it really means for your money and investments. The title says it all: Global Economy in the Shadow of War. The conflict that started in the Middle East at the end of February has completely changed the game.
Before the war, analysts were hoping for around 3.4% global growth in 2026, but now the IMF has cut it sharply to just 3.1%.
That small-sounding 0.3% drop is huge. It means slower jobs growth, weaker markets, and real pressure on portfolios worldwide. The biggest culprit is the ongoing war in the Middle East, which has already disrupted energy supplies and sent shockwaves through global markets. The IMF has laid out three scenarios: a reference case, an adverse case, and a severe one. Let's start with the baseline. In the reference forecast, global growth slows to 3.1% this year and 3.2% in 2027, while headline inflation rises to 4.4%. Energy prices are expected to jump nearly 19% in 2026 because of the conflict. Oil, gas, and commodities have all become significantly more expensive.
Gas is up 15, it's spreading.
The Strait of Hormuz, which handles about 20% of the world's oil and LNG, is facing serious disruptions. This is hitting supply chains hard. Advanced economies like the US will feel some pain, but emerging markets and developing countries are getting hit the hardest. Commodity importers around the world are already seeing higher costs for fuel, food, and everyday goods. Now, the adverse scenario is more worrying. If the war drags on, global growth could fall all the way to 2.5% this year. Inflation would climb to 5.4%. That means higher prices for longer and tighter financial conditions. In the severe scenario, growth drops below 2% and inflation pushes past 6%. We're talking recession territory. Downside risks to the global economy are very high. We are already drifting toward the worst scenarios. The IMF's chief economist made it clear. For international finance, this means more volatility in currencies, trade, and cross-border investments. The US dollar is strengthening while many other currencies face pressure. Markets hate this kind of uncertainty. Here in the United States, higher energy costs could feed into inflation again and affect everything from gas prices to corporate profits. American investors and businesses that rely on global supply chains need to pay close attention right now. This report is a serious warning bell for investors. Traditional stocks and bonds are looking riskier in this environment. Many are already shifting toward gold, the US dollar, and safe haven assets. Energy stocks may also see opportunities. But remember, every challenge brings opportunity. Smart investors who prepare now can position themselves ahead of the curve. The IMF says governments and central banks need more agile policies and better international cooperation to handle this. Without stronger coordination, we could see even more fragmentation and slower growth in the years ahead. So what should you do as an individual investor? First, review your portfolio and reduce unnecessary risks.
Okay, I see the high risk allocation. What do you recommend?
Let's shift some stocks to bonds for balance. Consider adding currency hedges, diversifying across assets, and thinking with a longer-term perspective. Short-term volatility is likely, but if the conflict de-escalates, a recovery could come faster than expected. The good news? The IMF projects a slight rebound to 3.2% growth in 2027 if disruptions ease. There's still hope, but right now caution is the name of the game. These aren't just abstract numbers. They directly impact your retirement accounts, business, and daily expenses. On this channel, we break down complex global finance reports like this one in simple, actionable terms. Let's look at the key insights from the oil prices. If this video helped you understand what's happening, hit that like button and subscribe for more updates. Let me know in the comments, how do you think this Middle East situation will affect the US economy and your investments? For now, treat this IMF warning as your wake-up call. The global economy is operating in the shadow of war, but prepared investors always find a way to stay ahead.